Welcome to Personal Finance Deep Dives, where we help you make your money work for you.
Have you ever wondered about this? It sounds completely insane, right? How on earth can somebody making 300 grand a year be broke? But it happens, all the time, and it proves a really important point. It's not just about how much money you make, it's about how you manage it.
The short answer? They aren't the ones in charge. They're letting their money run the show instead of the other way around. So today, we're gonna fix that. Consider this your official promotion to CEO of You Incorporated.
I mean, think about it like this. No sane business owner would try to turn a profit without knowing where their money is going. It would be a total shot in the dark. Yet that's exactly how most of us run our own lives. You are a business. Your income, that's your revenue. Your spending, those are your expenses, and your savings, well, that's your profit. So every new CEO has to hold their first board meeting. This is it. This is where you sit down and look at the numbers, no matter how scary they might be. It's the first and honestly, the hardest step.
And that leads us to a fundamental rule in, well, pretty much everything. You can't manage what you don't measure. It's time to get brutally honest and get to know your numbers.
Okay, so let's break down your spending into two big buckets. First up, you've got your fixed expenses. These are the predictable ones, right? Your rent, your car payment, your insurance. They show up every single month like clockwork. But then, you've got the variable expenses. This is the wild stuff. Groceries, gas, that dinner out you forgot about. These numbers change, and this is usually where the budget goes to die.
So here's your first assignment as the new CEO. I call it the 3-month tracking challenge. And it's simple. For the next 3 months, I just want you to watch. Don't change a thing. Just gather your bank and credit card statements, categorize every single purchase, yep, even that $4 coffee, and figure out your baseline. You need to know where your money is actually going before you can tell it where to go.
That brings us to our first takeaway. You are the CEO of your money, and tracking your spending is your first financial report. It's not about feeling guilty or judging yourself. It's just about getting the data. That's it. Okay, so you've tracked for a few months, you've got this pile of data, now what? Let's start with something super simple but really powerful. Let's talk guideline budgeting. Meet the 50-30-20 rule. It is popular for one big reason. It's just so easy to understand. You take your after-tax income, the money that actually hits your bank account, and you slice it up. 50% goes to your needs, your rent, your utilities, the stuff you absolutely have to pay. 30% goes to your wants. That's the fun stuff, like dinner with friends, hobbies, Netflix. And the last 20%, that's the most important part. It goes straight to savings and paying down debt.
And when you see it laid out like this, it just makes sense, doesn't it? Think of it less like a strict law and more like financial guardrails. It immediately tells you if one area of your life, say your wants, is maybe getting a little out of control.
That brings us to our next takeaway. You don't need a crazy, complicated spreadsheet with a million tabs to get started. A simple guideline like the 50-30-20 rule can be a total game changer. It gives you structure without making you want to pull your hair out. If this explainer is providing you value, please like, share, and subscribe to help our channel. Thank you so much. But hey, maybe simple guidelines aren't your style. Maybe you want to get granular. For those of you who want ultimate precision, let's talk about control budgeting, where every single dollar gets a job. This is called zero-based budgeting. The name sounds intense, but the idea is actually pretty straightforward. At the start of the month, your income minus all your expenses equals zero. Now, that does not mean you spend everything. It means you assign every single dollar a purpose. This much for groceries, this much for savings, this much for extra on the car payment. No dollar is left unemployed. It's the ultimate way to be intentional with your money. And then there's the old school classic, the envelope system. You might have seen it on social media as cash stuffing. This is the perfect method for when your debit card needs a timeout. You literally take cash and you stuff it into envelopes labeled groceries, gas, fun money. When the fun money envelope is empty, well, your fun for the month is over. It forces you to feel your spending, which is something we lose with plastic. That brings us to our next takeaway, and this one is crucial. Find a method that fits your personality. The most perfectly designed budget in the world is useless if you hate it and won't stick to it. Whether you're a big picture person or a details person, there's a system out there for you. Now, for a lot of us, a budget isn't just about saving for a vacation. It's about fighting a war. The war against debt. And trying to budget without a plan to tackle debt is like trying to sail a ship with a giant hole in it. So let's talk battle plans. You've got two main strategies. First is the debt avalanche. This is the pure math approach.
You throw every extra dollar at the debt with the highest interest rate, because that's what saves you the most money in the long run. Then, you have the debt snowball. With this one, you ignore the interest rates and you attack your smallest debt first. Why? For the psychological win. Knocking out that first debt feels amazing and gives you the motivation to keep going.
And you can see the difference right here in the numbers. In this example, using the avalanche method to go after that high-interest credit card first saves you over $500. The math doesn't lie. But only you can decide if the motivational boost you get from the snowball is worth paying that extra interest.
And that brings us to our next takeaway. A clear strategy is absolutely essential for tackling debt. Whether you choose the path of pure math or pure motivation, you have to pick a plan and stick with it. The best plan is the one that gets you to the finish line.
All right, let's do a quick recap. First, be the CEO of your money by actually tracking it. Second, start simple. A guideline like the 50-30-20 rule is perfect. Third, pick a budgeting style that actually fits your personality. And fourth, if you have debt, you need a specific battle plan to destroy it. You've got the tools, you've got the strategies, you've officially been promoted. So the only question left is, as the new CEO of You Inc., what's the first decision you're going to make? That's all for now, folks. Please like, share, and subscribe for more like this.